did that mean, too little, too late?
He's basically saying that the Fed had a window of opportunity earlier in the year. Things were looking a little bit rosier, markets were relatively stable, and they should have hiked rates then. They did not. So they missed that window. And then now they get very anxious about, sparking instability and being blamed for causing some kind of giant sell-off and, potentially rocking the boat of the, entire global financial markets. So with that in mind, they now feel constrained and can't do very much very quickly. So whatever they do, they have to keep in mind that the market's going to react like tenfold. And, it's so easily spooked. So if they do anything, it's going to be very gradual, very, very cautious. And he's saying that, we needed things earlier. We needed this to happen earlier in the year, and you should have done more. And that they essentially missed that.
Obviously, hindsight 2020. So did he lay out any kind of theory about how he would want the rate hikes to go?
He's been pretty adamant the whole year about, they need to do it this year. They've been clear about doing it this year. And he's really set his sights on September for a while now. He was saying that, they need to do something. And his anticipation, I think, is that it'll be a small rate hike, but something just to get the ball rolling.
Like
and then
a
they're going to hands off.
Situation.
Exactly. Mm-hmm. He, in fact, uses that phrase.
One and done?
Mm-hmm.
Yeah. Is there any kind of investment angle that he spins to this? Like, okay, one and done, this is how I'm going to play it?
Absolutely. So he says that investors need to be much more worried about capital preservation than any return on capital right now. And so it's a little scary. So one of the things that he recommends, which I think he also does in his own portfolio, is focusing on shorter dated corporate bonds. So things that are going to mature in the next 1 to 2 years. It's probably a safe bet that the company's not going to go belly up in the next, however many months. So he thinks that they're not high yielding and they're not going to, he says they're not going to put your kids through college, but this is safer and a better bet now.
And does he have any sort of insight into how big? You were saying the part of the article is it's better to be big. What did he mean by that?
So he spends a fair amount of the article the outlook talking about, we really like whales and we like elephants for some reason, and we don't like ants and snails. We kill these bugs without a second thought. And so his point was that there's a kind of bias towards larger things, and that therefore, right at the end of the outlook, he says it's better to have a big portfolio than a small portfolio. Which is interesting to me because he just, almost a year ago, jumped to Janus, and part of his drumbeat for why he was happy to be at Janus, which, might be in part spin, was that he now had a smaller portfolio, which is easier to navigate, much more nimble in the markets. So it's a little bit contradictory to me to read that. We also get PIMCO total return flow data, the assets under management for the formerly the world's largest fund that he used to manage. So
right, which we are waiting for also.